How's it going, everyone? My name is Jake with Trade Confident, and today I'm going to be talking to you about the crazy volatile month we have coming up here. September is going to see major events both in the general economy and in crypto, and it's going to produce a lot of trade volume, and we're going to have to see where it's going to bring us. Before we get started, if you enjoy this video, please leave a like and subscribe. It really helps our channel out. We provide crypto content, education, and analysis every single weekday, so if you want to stay with us, keep learning and growing as a trader, please subscribe and hit the alert bell. It really helps out. With that in mind, let's get started. Let's start out with the general economics of it. This is going to have the largest impact on the overall global markets. Back in 2020, the government had started what was called quantitative easing. The point of this was to help out a stressed out market from the pandemic and inject more money into risk type assets. This is why crypto had exploded at that time. What they were doing was injecting money into the markets using US treasuries and mortgage-related securities. They were just buying and buying and buying, and it put a lot of money into the market and really helped the economy in a time it really needed it because of the major setbacks and slowdowns caused by the pandemic. A couple of years later, we have rampant inflation. Most of what the government has been doing is using interest rate increases in order to slow down borrowing and slow down the economy itself to try and level things off a bit and bring inflation down. But it has not been enough. The solution to the runaway inflation, besides interest rate hikes, was quantitative tightening. What this is the opposite of quantitative easing, and that they're actually selling off these treasuries and mortgage-related securities in order to stop and bring down the market. They're taking money out, and because of this, risk assets are dropping. Starting on June 1st, the government started removing $47.5 billion of their $8.5 trillion balance sheet every single month, and it's been happening since then up until now. Today, September 1st, the government doubled down on this. This means they are now removing $95 billion from their balance sheet every single month. The result of this will be continued money moving out of the general markets. The government, again, $95 billion the government by themselves is removing $95 billion from the markets every single month. In order to show you why this is important and how it relates to the markets now, we got to go back to June 1st on the charts. Let me show you now. Right here is June 1st. I'm going to go from the opening of the candle all the way down to the closing of the candle at the bottom of this dip. Here you can see in 18 days, basically 3 weeks, a little under 3 weeks, we had a 40% drop. So in less than a month at the start of this quantitative tightening, we saw a 40% drop. And on Ethereum, it was even more. It was actually about 50%. This is major. This is a lot of money. Major crash. This is actually, like, we know crypto's super volatile. It's going to move 20% on some days, just like crazy. But 40 to 50% is actually considered a huge amount. It's a huge crash. And now I don't think it's going to happen that drastically this time around. I don't think the number is going to be that high, but I think it's reasonable to expect large amounts of money to be moving out of the market pretty quickly. Earlier, I also spoke on the fact that the federal government was raising interest rates. We all know this, it's been happening for months, but it's been announced, or at least speculated, that in September they will be raising the interest rates by 50 basis points again. This isn't as much as the previous 2 months where it was 75 basis points per month, but the fact that they're still raising interest rates shows that inflation is continuing to rise, even though it has been slowing down over the past couple of months. Previously, these raises in interest rates have resulted in smaller moves down, although 1 month we did see a move up, followed by a continued move down. But it's reasonable to expect between the quantitative tightening and the interest rate hikes that we could see a lot of bearish volatility in the market this month. Next up, I'm going to be talking about crypto-specific news. In this, we could see a really bullish movement from both Ethereum and Cardano because both of their blockchains are getting significant upgrades. The first one I'm going to talk about is the Ethereum merge. This is expected to happen sometime between September 10th and September 20th, and we will keep you updated as to when this is going to happen. The Ethereum merge is going to move the Ethereum blockchain to proof of stake rather than the proof of work that it originally worked on. The point of this is to improve environmental impact, increase security, and introduce new features and scalability to the blockchain itself. Just to show you what actually happens to Ethereum immediately after its original upgrade, the last time an upgrade was December 1st. Right here on the chart, we can see that. And up until its next higher high, within 39 bars, we saw a 118% move up. Now, this is also the beginning of the major bull market in 2021 that eventually saw Ethereum hit $4,800. So it did have contributions to that. It wasn't, of course, only because of Ethereum that the bull market happened. I just told you with quantitative easing and just all the things that the government did to help stimulate the economy. This is more what contributed to the major moves up in crypto. But the upgrade to Ethereum did see major moves up within a month immediately after it started. Now, I can't guarantee that this will happen again. I can't say for certain, especially now that we're in a bear market, that Ethereum will see this crazy 118% jump. But it is reasonable to expect that at least long term, that Ethereum will be bullish because it is improving the blockchain. It's providing more utility, it's improving security, reducing environmental impacts, and just in general becoming more efficient and useful for consumers like you and I. As I said before, this merge is expected to happen between September 10th and September 20th. Again, we'll keep everyone updated and give you all the information you need to know about the merge coming up. Next up, I'm going to be talking about the Vassal hard fork coming up sometime in December. There's no specific date because we're waiting for staking pool operators and exchanges to upgrade to the newest version of Cardano, and as soon as that happens, the Vassal hard fork can take place. The Vassal hard fork is going to be improving the Cardano blockchain significantly by increasing throughput. It's going to improve on the smart contracts, and it's going to bring new features to dApps on the blockchain, allowing developers to create more and more utility for ADA itself. Now, let me show you on the charts what happened last time Cardano had an upgrade to its blockchain. Here we see on September 12th, 2021, this was when the Alonzo upgrade happened. Immediately after, it saw a 24% drop to the next local bottom within 9 bars. This is just over a week. We saw a 24% drop. It's really interesting to me that while Ethereum had an upgrade, it saw a pump of about 118%, given it was at the very beginning of the bull market in 2020. It's really interesting to me that Cardano actually saw a drop, and that seems to be somewhat consistent. After the upgrade, Cardano saw almost a 25% drop within a week. This is crazy, crazy quick, and I think it's going to bring a lot of volatility between these two coins over the next month or so. Now, I can't guarantee that this is going to happen. Remember, it is super important to remember that past history does not guarantee future results, but for the most part, past history is all we have to go off of. So because of that, we highly recommend risk management and just keeping that up, being safe in your trades and all of that. Last but not least, Cardano was also, as of today, listed on Robinhood. We are seeing a little bit of a move up, but nothing crazy, and I'm not expecting anything crazy from that. But if you use Robinhood, you now have access to ADA Cardano, and it is now tradable for you on that platform. In conclusion, we have a crazy volatile month coming up ahead of us. Between quantitative tightening, interest rate hikes, Ethereum and ADA upgrades, and a new listing for ADA, we're going to see a lot of price movement from a lot of different coins throughout this market. Some of the previous moves of this kind resulted in 40 to 50% drops. It resulted in 118% moves up, 24% drops. All of this is going to happen just within this month, so I'm really, really interested to see how this is going to turn out. We will be providing updates as things happen, and we're going to show you the price action and what to expect next. The most important thing through this highly volatile month is going to be risk management, which is the foundation of the trade confidence strategy. So if you really want to get help, if you want to learn how to manage your money and your risk throughout this trading process through September, let me show you how you can do that. What you're going to want to do is click the link in the description. This will bring you to this page. You're going to start trading with us. First off, you're just going to click on our scalping record. It's really important that you check this. We have beat the S&P 500 by 440%. For those that don't know, the S&P 500 earns about 10% profit every single year on average. It's not always that, but on average, it's 10%. However, and again, this is yearly. However, we've managed to beat the S&P 500. We've made 44% in just 3 months. This beats the S&P 500 by 440%. And we've managed to do this in a bear market using only long trades. For those that don't know, US traders really only have access to long trades, as short trades are reserved for large institutions or for those outside of the United States. So for you US-based traders, this is going to be really good for you. From there, you're going to watch our strategy video. You'll see exactly how we trade and the risk management we use and why it works so well. When you're ready, you're going to grab a membership at this link. It's $75 a month and gives you access to all 20 crypto and 20 stock charts on our website. You're also going to gain access to all the trade calls that have earned us that 440% above the S&P 500. You'll have masterclasses to help continue learning to trade. You're going to be able to talk to other Trade Confident members in the community chat. Last but not least, you're going to get access to our live coaching every single month. This is just a live Zoom call, 1 to 2 hours, where all Trade Confident members are welcome to come and join us. We answer questions, have fun, and just learn together as a trading group. From there, you're going to join the Telegram at this link. This will give you access to all the trade calls and exits, as well as market updates. All of this is included free with the membership. With that, thank you so much for watching. We really, really appreciate you staying to the end here. Let me know if you have any other instances of high volatility coming up in September. We'd love to hear about it, and we'd be happy to feature it in some future videos. With that in mind, thanks so much for watching. Trade safe, trade confident, and I will see you in the next video.